Thanks to the recent run-up in bond yields, dividend stocks have been put through the meat grinder. That includes many of the food and beverage plays that we've now realized will come under some pressure, perhaps because of this new class of weight loss drugs. That was Ozempic, Mounjaro, more on that later. But at a certain point, these food stocks become too cheap to ignore, don't they? So, are we there yet? Take Conagra Brands, the packaged food powerhouse you know as Bird's Eye, Marie Callender's, Healthy Choice, Slim Jim, Orville Redenbacher, Hebrew National, and many others. This morning, Conagra reported what I call a mixed quarter, with lower than expected sales and organic growth because price increases weren't enough to make up for a decline in volumes. Still, those price increases let them post a nice earnings beat. And management reiterated their long-term guidance, talking about a strong end of the year. In response, the market seemed confused. Conagra opened down 2.7%, then rebounded to up 2% at one point, before ending the day off about 2%. At this point, the stock's now down roughly 34%. Yields 5.4%. Is the worst behind them? We got to find out. Let's dig deep with Sean Connolly. He's the president and CEO of Conagra Brands. Learn more about the quarter. What comes next, Mr. Connolly? Welcome back to Mad Money.
Hey, Jim, how are you?
All right, Sean. So let's get right to it. I look at a stock that's down this much, that yields 5%, it's at 25. And I'm not going to suddenly say, wait a second, everything's going great here, then what happened? I mean, you've been pretty forward. There's some real issues. I want you to address them because one of them involves a 40-year trend that seems to have reversed. And I want to know whether there's something fundamentally wrong to frozen, because that's so important to you. Why don't you go over what you saw? Because this was a little bit different from what I was hoping for, obviously, but you're stuck by what you think is going to happen in the second half.
Yeah, sure, Jim. Let's take it from the top. We had a very good quarter in terms of our supply chain performance, our gross margin expansion, our operating margin expansion, and paying down debt. The soft spot in the quarter was on sales. And you got to keep in mind, we're 2 years into the largest inflation super cycle that I've seen in my 32 years in the food business. And by and large, the consumer's been very resilient. But over the course of the summer, we did start to see some behavioral shifts. It was a paradoxical combination of selective splurging and also broad-based belt tightening. So maybe the same consumer would say, the heck with it, I'm going to take a trip this summer and I don't care what it costs. And a minute later, they would reprioritize their purchases in order to create offsets. Within food, that meant some tailwinds for some businesses and some headwinds for other businesses. We experienced both. Our multi-serve meal business, for example, had a tailwind, but our frozen single-serve meal business had a bit of a headwind. Now, that's a business that has been a juggernaut and has been growing for us for many years. We're the leader in the marketplace. We're the largest player in frozen food. And so we don't look at this as any more than a temporary consumer tactic to try to create offsets for expenditures that they were determined to make over the course of the summer.
All right, so tomorrow we get an unemployment number. One of the things that the Fed is very worried about is obviously wage growth, maybe too hot, jobless. We have 3.6%, 3.7% unemployment. Why is that not resonating more? We've got so many people with jobs. I would think that they'd be doing single serve, whatever they like in the great frozen food category you have.
Well, you've got lower income consumers whose household balance sheets have become very stretched, and where they typically rely on convenience items at the top of their priority list. Over the course of the summer, when they did commit to other expenditures like travel, they prioritized multi-serve meals. Think of that as stretchable meals that feed more mouths at once. And so we saw a bit of a mix shift there. But one thing we've learned about the consumer over the years is that habits and practices are very hard to change for the long haul. And the single most unshakable trend in consumer packaged goods in the last 50 years is the need for convenience, because people live very busy lives. In food, they want great tasting food that's a great value, that's healthy for you, but they don't want cleanup, they don't want prep, and that's where frozen single-serve meals come in. We've got a phenomenal business, the best in the U.S. We're not concerned about these short-term behaviors because, frankly, we've got a multi-year, multi-decade track record of growth in this area.
Okay, so the Wall Street Journal had this article today citing a Morgan Stanley study that talked about these new weight loss drugs, well, also for diabetes and so other things. And people are worried. People feel when Walmart said, look, there's been a little bit of a slowdown, that it's already these drugs. I mean, what's your big picture think about these drugs and what they could mean for Conagra?
Yeah, I'll give you my thinking on that, Jim. Obviously, it's very early days. As my peers have said, no one really knows exactly how prevalent these drugs are going to become. But let's say they become more prevalent. If that were to happen, I believe we would be very well positioned. You have to keep in mind that health and wellness has always been a central part of our Conagra Way playbook, particularly in our two biggest businesses of frozen and snacks. Take frozen as an example. Our two biggest businesses are Bird's Eye vegetables and frozen single-serve meals like Healthy Choice. These are products that have great nutrients, low sodium, low fat. All the things you don't want are out of it, but all the things you do want are in it. So if we were to find ourselves in a situation where suddenly more consumers are looking for healthier meals and portion control, products like Bird's Eye and Healthy Choice are incredibly well positioned, and we'd be happy to turn those consumers into loyalists of our brands. Similarly, in our snacks business, our top 2 snack categories are meat sticks and popcorn, brands like Slim Jim and Angie's Boom Chicka Pop. These are healthier snacks. These are not cookies. These are not chips. These are not candy. So if we were to suddenly find snackers looking to rethink their current snacking choices for healthier alternatives, we'd be happy to welcome them to the family.
I'm so glad you mentioned that. Left out of all these stories, the biggest risk and the most concern that I see when I talk to the doctor community, you're not getting enough protein. Now, no one talks about that. Can you double down on protein? Because what is missing in the diet that must be had for people who are taking the GLP-1s.
Yeah, our demand science team, Jim, tracks all of these trends. And the definition of healthy has changed virtually nonstop since the 90s. At one point, it meant less fat. It meant less calories. It meant lower carbs. It's meant grain-free. It's meant whole grain. It's meant fiber. It's constantly changing. So what we do is we study the current trends, then we design those trends into our products so that we're always contemporary and relevant and provocative. These days, with these new drugs coming on, it might mean things like portion control. It probably would mean things like more protein, more vegetable nutrition, fewer carbs. We've got all of that in our playbook, and we can deploy it as necessary.
All right, terrific. I'm glad you explained it to everybody. In the meantime, I know that because of the margins and expansion, you've got no problem with the dividend. It's an easy do for you. I just keep hoping you get to where exactly what you say. You shuffle the portfolio so it's got all the things that you need. I want to thank Sean Connolly, President and CEO of Conagra Brands, for coming on the show. Thank you, Sean. Good to see you.
Thanks, Jim.
Okay, Mad Money's back after the break.
Coming up, is this stock as rugged as the denim it sells? A look at Levi Strauss next.